Hey guys, hope you guys had a good week trading. So we had a pretty slow start to the week on Monday and Tuesday with those tight ranges, but I mean honestly, we really didn't even make too much of a move this week. So if you look at it here, if you take Tuesday's low right about here at 410.9 and you go to Wednesday's high, you can see that we held a solid $3 range at close. Now, yeah, we did have some wicks a little higher. So we had, if you include the wicks, we had, let's see here, about a $5.60 total movement for the whole week. That is super, super low. So the biggest thing I'm seeing here, and this is the daily time frame, is that we're still imbalanced. So on this day, we did on Tuesday establish a new supply at 411.19. However, the issue was that we closed over it, and we have closed over it now for 3 days in a row. Now, with this huge wick down here, there was potential where I was finally looking that we were going to close below that supply and start rebalancing ourselves. However, we did not do that. So the one thing I'm watching here is we have this nice blue resistance line that is 3 points now. So that is going to be our key resistance. We are still in this bigger black rising wedge here with our support for that for Monday at 408.16. And resistance for this blue line is at 413.12. With this support line, which was also 3 points broken, we can go ahead and get rid of that. You can kind of see where we're at here. So in general, one could still say this is just a really long flag and a massive bull flag, and we're going to push up into the 420s. However, if you really look at it, there's almost more of a diamond pattern than anything if you look at it here. So obviously it's a little off because I have this as a rising wedge, not a channel. So you can see the diamond pattern that is forming here, and a lot of times these become diamond top patterns, which would mean we make our move up, we form our huge consolidation, and then we're going to start a move down. Which, if that move down starts coming, then we're going to start targeting this 390 area again. However, as of right now, we are just stuck in consolidation. We are at a really, really bad spot right now where it's too long or too late to go long, which means we are already too high and too close to major resistances that we obviously, dating back to February and really even back to August here, you can see this 420 area here. This is major resistance for, almost 9 months now, almost going on a year here in just a couple months. So it's too late to go long as of right now until we're out of this bear market and recession and rate cuts and all that stuff. But it's still too early to go short because, as you have seen now for the last, over a month now, we have just consolidated. We're not making a move. So as of right now, we're in a holding pattern. I think once we break below 405.2 and hold below 405.2, that'll be our biggest sign that a bigger sell-off is coming. But I also like the idea that if we did come back up next week and have one of these massive 2-day kind of breakout things like we have been having, where we have these huge patterns of massive moves up before we start to lay down, you can see we bounced and then had a huge doji and then boom, came back down. I would be looking to go short somewhere up here if we hit the 417 to 419 area. Now, on a weekly time frame here, we had this supply here at 416. We did come down and we closed just below 411.64 demand. So you can see here we've been holding this beyond type $4.35 range now of closures for 5 weeks in a row. Now, you can see here we're in this really nice rising wedge. We are forming a new resistance line here. Same thing though, if you look at this, this actually does look like a nice bull flag where we're going to go up, flag, boom, up. However, this is also turning into a really nice carrot top here, which could result in a move down. So we did come down. We are still holding the weekly 8 EMA support here. So that'll be my first sign is a closure below the 8 EMA, which is at 49.77. Now, one interesting thing is that weekly support is going to be at 410.61 and weekly resistance is at 411.8. Now, granted, this weekly resistance I would not call super strong just because it's only 2 point and it's just a 2 week like back to back. This support here I do watch more critically. So if we break below this support, then I'm going to be looking for that move down. But more importantly, I'm going to be looking for a closure under 407.1 to really signify that the next leg down is coming. As you can see, this 407.1 area is just a very, very strong support. If you can look back here, we broke over it, back tested it, and then popped. Down here, we broke over it, back tested it, and then we lost it. Here, we hard rejected it, kind of same thing, came down, retested it, lost it. So major pivot point for this area up here. Going over to futures, so one interesting is that we did reconfirm 41.53 as a major supply, which is resistance. Now you can see here, and we actually got an interesting pump there right before close for our, let me make sure I have that set right. Use settlement at close. Yep. So we did actually get an interesting pump. So right now you can see here we have been within a 18-point range for the last 1, 2, 3, 4, 5, 6 closures. So very, very tight range. So right now, basically what you can see is here we did break this support line, but so we can go ahead and take that out here, but you can see this is a really nice resistance line. We perfectly rejected it yesterday, and we have 1, 2, 3, 4 rejections off that line. So right now our resistance for Monday is 41.60 and our support is 41.04. I will be looking for a closure under 41.34 or over 41.53 really to signal where we're going next. Favoritism would go to the downside, but again, we are just in a massive consolidation. And you can see, same here, we are in the same diamond pattern here in the daily. And this one actually looks a little more accurate because of just the way futures price action works. This is actually why I enjoy trading SPY, but I enjoy doing TA on futures because it does give quite a different picture sometimes. And you can see just how nice this diamond pattern is. And you can see basically that shows that this downside potential is to this 40.40, 40.55 area. Now, in the weekly pattern here, this is where things get a little interesting to me. We are in this rising wedge here. We have a really nice resistance right here. And we have our nice breakout triangle. Same thing here. So resistance is 41.39 and support is 41.25. So very, very tight. Now, one interesting thing here is if you look at this JPM collar, 6:30 is expiration. Now, historically speaking, for 2022 and even 2023 so far, the first 7 weeks post collar rolls, which means post quarterly, there's generally one trend in the market. So what happens is we start trending up, and then from week 7, which starts next week, to week 11, there is generally a retrace or rebound depending on what direction we're going. Since this 7 weeks has mostly been bullish, one could expect that we are now going to see the weakness, which, as you see by this rising wedge, is absolutely supported by that theory. So that would mean that next week will be our top, or at least start the sell-off. Now, I have seen this happen before, where instead of week 7 starting the sell-off, week 7 actually puts in the top, which means we could see a pump back up to this 41.90 area next week, and then week 8 actually would start the sell-off down for 1, 2, 3, 4-ish weeks. We'll see what happens. But biggest thing to note here is that we did close, finally, outside of this range. We did close the candle body below this 41.38 range. And you can see for the last 1, 2, 3, 4 weeks now, this has been our range, 41.90 to 41.38. Now, 41.25 is the support of this doji, and realistically, I'd like to see us close under 40.95 to really give me confirmation of further downside. However, as of right now, these are our key targets. We are in some extremely tight consolidation right here, and I would expect a pretty explosive move whenever we finally do break out or break down. Now, going over to the VIX here, one interesting thing is I've been pointing out this 17.1 range, 17 on the VIX, it has been a magnet. You can see here how much time we have spent just consolidating over it. We break out, come right back to it, break down, come right back to it, break out, right back to it. So right now, favoritism would be, being that we are rejecting the daily 8 EMA and all these wicks up here, is that we're going to see the VIX continue to come down. We are in this breakout triangle here. However, both the last basically 3 days of trading, we just continue to push the goalpost out. Really, these black lines are our more major supports to watch and resistance to watch. But pretty much until we break out over 17 and realistically break out over 17.8, and more importantly, hold over that for more than one day, favoritism would go to a neutral to bullish spot. However, I do see a potential for us to come down and test this 52-week low at 15.53 sometime this week. Now, one thing that I have been watching, and if you read my written TA, you know that I've been keeping a very, very close eye on, is the dollar. So I will say I do not fully understand the science of why a strong dollar means weak tech and a weak stock market. So don't ask me why. I just know just by historical trends and watching the market that is what usually happens. So one thing that I've been watching here is for the dollar to break out. As you see, since March 8th, the dollar has done nothing but sell off. Now, where's March 8th? March 8th is right here. And you can see the low on SPY was put on March 13th. And you can see what happened. And then pretty much our top relatively was April 18th. And then we've just been consolidating. Now, if you look at DXY, the dollar, it came all the way down. And then here's March 18th. Or April 18th, I mean. So you can see we are just consolidating on the dollar and on SPY. So with the dollar breaking out, and it really was this important 102.16 area, and now we did break out even the next resistance at 102.54. If the dollar continues to show this strength it's showing and tries to break out into this 103.88 area, more likely than not, we are finally going to see tech show weakness. Now, one interesting thing is the NASDAQ actually closed lower than SPY did on Friday, and it's been a really long time since we've seen that happen. Lately, tech has been showing strength, and I've been saying until tech shows weakness, and more importantly, tech leads the sell-off, any sell-off on SPY is not going to be sustained. Same thing with the 10-year here. The 10-year has been selling off since March 2nd and pretty much consolidating since March 29th. And you can see what this looks like here. Now, the 10-year did bounce off this key 3.386 support. And realistically, if we can break out over 3.522 and more importantly, 3.607%, then that's going to show strength up here. And more likely than not, that will take tech down with it also. One other thing to keep a pretty close eye on here is Bitcoin. Now, I'm a big fan of watching Bitcoin. I don't trade Bitcoin. I really don't recommend anybody trading crypto. But more importantly than not, the thing I'm showing here is that we were actually in this diamond pattern. I showed this earlier last week that we were in the diamond here on crypto, which showed a massive move up that dated back to, look at that, March 10th, March 8th right here, which was also the bottom and the top of DXY and the bottom of SPY. So it moved up and it's just been consolidating really since about March 18th. Now, with this consolidation, we are finally breaking range. So you can see right here, this 27.113 was realistically major support. And you could even say, I guess, that 26.964 was the final support. So what happened is that we closed below that support yesterday, Friday, and now we actually did turn it into resistance if you look at it on this doji candle. Now, granted, this doji candle right here is actually a pretty strong reversal candle, and that does hint at upside potential. However, if this daily candle, so today's Saturday's candle, can close below 26.816 support, then I'm realistically going to start looking for Bitcoin to come down to 25K. If Bitcoin comes down to 25K, that is going to, in my opinion, take the market down with it. That should lead to the dollar going up, and that's going to take the markets down with it. So that is what I'm watching for next week pretty much. I'm looking for continued weakness in crypto, continued strength in the dollar, and to see the markets and tech as a whole finally start to show some weakness. But again, it's not just about showing weakness, it's about holding sustained weakness and sustained sell-off. As you can see by all these wicks here, and I guess SPY shows it better, but you can see all these downside massive wicks, even back here and stuff like that. Every sell-off that has happened outside of maybe April 25th has been immediately by end of day bought up. Until SPY can have a red day, much like this negative 1.59% day, and hold that red day all day into close and throw a follow-up red day, I don't see the market sustainably selling off. So, all right, guys, I hope you guys have a great weekend, and I will see you guys next week.